All right, this, folks, is going to be the biggest week of the second half of the year so far, and it could be the biggest week of the year. That's a big statement, but we got three big things happening this week. First, we have the Fed meeting. The Fed's going to meet, and they are going to make their decision on Wednesday on whether or not they're going to keep the Fed funds rate the same or lower it. And then on Thursday, we get the PCE, which is the Personal Consumption Expenditure Report. That is the Fed's favorite measure of inflation. Will inflation go down? That's the big question. And then really this whole week is jobs week. So we have jobs reports, jobs related information coming out from Tuesday through Friday. Let's get into the specifics though. On Monday, we start out, we have a 2-year Treasury auction result, and we also have a 5-year Treasury auction. And then Tuesday, not really impacting interest rates, but a big housing report coming out. We have two of them, the FHFA Home Price Index and then the Case-Shiller Home Price Index. That is the gold standard measure for home price appreciation across the country. We also have Consumer Confidence Report that for the month. And we have JOLTS. We have the Job Opening Labor Turnover Survey report, which will basically show how many jobs are open on the market right now. Wednesday, again, here we go with jobs week. Starts off with ADP private payroll report. We also have another look at GDP, the gross domestic product. And then expectation, previous report was a drop by half a point. Consensus now is going to be about 2.5 points. We also have the Bank of Canada making their Fed rate decision. But really, the big news that day, it's going to drive everything, is the Fed rate decision. Not only the Fed rate decision, but what the Fed Chair Powell says afterwards. Because remember, they don't meet in August. Their next meeting is going to be in September. This will be a really big day of the week. Hump Day is it's either going to knock us down or it's going to uplift us, and we're going to be happy as we go into Thursday and Friday. So what we have going on Thursday, we had the Personal Consumption Expenditure Report. Last month, the core PCE was at 2.7%. Will it be 2.7? Will it be a little lower? Will it go up? The expectation really is that it's going to go up. So if it goes down or stays the same, that's a win in my book. We also have the initial jobless claims, the continuing jobless claims. And then on Friday's the big day for jobs. This culminates the week. We have the BLS, the Bureau of Labor and Statistics jobs report. This report has been way off from ADP pretty much most of this year. If we see unemployment rate, it was at 4.1%. We actually believe it's going to go up to 4.2%. So anything at 4.1 or lower is going to be very bad for interest rates. It just shows really a super hot economy. Anything at 4.2 or above really will help out. But we also will be looking to make sure that really average hourly earnings and weekly earnings are staying steady, not going through the roof. We also have construction spending. And we have, of course, the University of Michigan Consumer Sentiment Index. But that BLS jobs report, that's going to be a big one. Are we going to get more job acceptances than expected like we did last month? Or will we come in a little lower? So jobs report has been off really much of this year. So big week, really multiple options for rates to go up or down. And but this could really set the tone really for the rest of the summer and for the rest of the summer's housing market, because if interest rates continue to go up, which they have, and I'll get into in a minute, do not expect homes to start going off the market. Do not expect sellers to keep selling homes, because people are not going to buy in a rate environment where we are near 7% conventional. But let's look at rates now. All right, so you're looking at 30-year fixed rate, looking at between 6.8, 6.9% conventional. But let's look at VA. We started the year at 6.41%. Go back to January, 6.41%. Now we are at 6.4% as we start this last week of July. And you can see that we dipped between 6 and 6.25 a couple times, but we have not been able to stay in that trough between 6 and 6.25. And we really got into the fives just one really small couple days at the beginning of April. So as we begin this week, we're at 6.4%. These aren't my rates specifically, but these are the average rates across the country from different lenders. And where will we end up? If we see a good, any of these reports come in good, we see rates come down, expect this to go down, I don't think we'll go below 6%, but we should put ourselves squarely between 6 and 6.25. But that's what I have for you this week. Hope you guys have a great week. Stay tuned. We'll be putting out more information as some of these reports come out, because they're going to be big ones, my friends. They're going to be big. All right, we'll talk to you later. Aloha.